Good morning, everyone, and welcome to the European crossover webinar, and welcome to NFP Friday. Moment, I'll move this out of the way. We can see here the dollar's finally getting up above this Bias chart resistance we had yesterday, which is 97.81, starting to push a little bit above there. The euro we posted in here had some good volume support coming in here at 1165, so we've dipped below, but we're holding in this area. We've also seen cable come back in here. Now, we had our bias chart support yesterday at 30.08, but we've held here at this level. I thought they might be able to dip below it and then tag it and then start to move up, but that level here right there at 30.18 has held. Dollar yen's relatively quiet, okay? And peso has really done its part to really push up in here up against this trend line, and certainly with a bit of risk aversion, we've had this cable pop up. I had mentioned yesterday I wouldn't want to touch this thing and end up going in and getting involved because it looked like it was the one thing that was really moving here, as you can see, as we broke this area here, and we were already on a buy mode here, solid buy mode right here as we shifted up here on the exponential moving average on the 2-hour. Usually I use it for the 30-minute, but it had already been trying to hold up real well, and then it just started popping. I'm thinking, boy, this thing's going to probably want to keep on moving, and certainly did, kept pressing higher. The one market that's really catching people's attention, though, is with the Aussie dollar. We've really pressed in and gotten below 70 cents. We'll see whether or not we can hold in this area here. We have the 69.87 now. Where that 69.87 comes from is right here, and actually the level here on the daily, 69.84. And this market's pretty much hanging on for dear life. I think that the one possibility that could end up happening, if we don't, we'll find out, is if we were to break below this area and we go in and test the stops below that, I think that we could possibly trigger. I was talking to some guys in the chat room in the Asian session, and at least from a technical standpoint, I could see where we could try and hit the stops here and make a rundown here towards the 61%, and then pop back up. And the reason I'm thinking pop back up is, even though I think that U.S.-China thing is a bunch of nonsense, still, if we were to hit these stops below that, because you can imagine anyone that's long, they're hanging on by a thread at the 70 cents level. If they break below here, it's going to, I would think, work like a magnet to pull it down here. We may test our way down here, but then at that point, people might be thinking, hey, I don't want to be short, and then we could pop right back up. But as long as we're below the 70 cents, I think you have people that, and then on top of that, you're on a Friday, we could really, try and make a push below this, but we'll see what happens, what will happen here. Another key market was also the sterling versus the Aussie. We'll just take a quick look at that one too. This one made a push last night, or in the Asian session. We're pairing back a little bit. This 86.12 has been key right here. It's one of the places where I took on an ad here, and or coming up against this low one, I'd already shorted it, and I was able to get out of the ad, but then I was able to fortunately catch off when we had the Bank of England dip. Didn't catch the lows at all, but I didn't venture back in. And one of the things I was looking in, and I don't know if some people might have got stopped out last night, possibly, I don't know. We had this little medium-legged doji, and I'm thinking, okay, well, this really needs to hold here. This market can really start to fall apart. Let's see what happens. And we end up closing a little bit higher. We kind of dip, and then we start marching much higher, and um, it looked like this market could make a move up towards this 86, 82, and maybe that's 78% with this if the Aussie were to get itself into some trouble. Um, so far, not yet. So far, not yet. And we're actually pulling back just below this 12. So we'll see what happens if whether or not Aussie can, hang on as we get through NFP. But right now, my concern with the Aussie is that since we're below 70 cents, I'm talking about the Aussie dollar, we'll see what happens, but it could really, work against it and work kind of like as a magnet to draw that down. But we shall see what happens. I think, like I said, my concern is being a Friday, whether or not they press this Aussie lower. But we shall see. Aussie yen trying to go and hold on to itself here. We're going to move into the news. With the morning bid, one clear takeaway from the results of the English election so far is that the both ruling Conservatives and to a lesser extent opposition Labour were punished for their failure one way or another to break the deadlock over Brexit. It's clear at this stage whether it's right to attribute the rise in support for overtly pro-Remain parties like the Lib Dems and the Greens, to an anti-Brexit vote making itself heard, with more than 40% of English local council vote results declared. The Conservative Party had lost 359 councillors, and the Labour Party had lost 74 councillors, according to a BBC tally. A more complete picture will emerge as the result comes in. A speech by Donald Tusk, president of the European Council at Warsaw University, Poland's Constitution Day, will be watched closely for signs that he's eyeing a return for domestic politics. Let's see. Let's just move on to the markets. The Powell effect continues. His remarks on Wednesday downplaying the chances of a rate cut weighed on New York stocks last night, along with almost 3% drop. It also offset strong industrial orders and productive data and has supported the dollar against other currencies. World stocks are set for the first week in the red after 5 straight weeks, although Japan and China have been out for much of the week. Now markets are focused on what the U.S. monthly non-farm payrolls will bring. Expectations are already for a softer number than March, 185,000 net new jobs added and unemployment steady at 3.8. Money markets are pricing a 49% chance of a Fed rate cut this year, down from over 61% before Powell's remarks and the Fed meeting, but even that looks ambitious. In Europe, expect headline inflation to have edged up in April, mostly due to oil, but also rising core inflation, which could have been pushed by the late Easter. The UK is expected to provide another solid PMI reading for services. Meanwhile, we've seen U.S. earnings growth at 0.7% so far this quarter versus predictions of 2%, and hunger for new shares, which sent newly IPO'd vegan offering Beyond Meat up a stupendous 160%. European earnings, too, are looking better than expected, and this morning, HSBC had gladdened many hearts with a 31% Q1 profits rise, considering that Societe Generale, which suffered a drop in Q1 profits. On currency markets, the dollar, which touched near 2-week lows early in the week, has bounced 0.7% this level thanks to Powell support. A touch firmer today, but more or less flat on the day and the week. Payrolls could be key, while no less than 8 Fed speakers will be on the wires later in the day. Australia and New Zealand dollars have weakened on bets that both countries could cut interest rates next week, as much as 0.5% at one point against the dollar. Sterling shows a little reaction to signs voters have punished both main parties at the local elections. Unsurprising, given its shrug off of the Bank of England's hawkish tones yesterday. Instead, all eyes are transpiring on the Brexit front. The currency is trading just off 2-week highs. It hit early in the week on reports suggesting a rapprochement between the government and the opposition Labour Party on the rise. So let's see. The euro could react to today's inflation print. So it's so far it's failed to derive any lasting benefit from better than expected data. After all, the prospect of Trump trade tariffs weigh, as does upcoming European Parliament elections. And on to the dollar. The dollar was trying to end the week with a firmer tone on Friday as markets scaled back bets on U.S. rate cut and speculated that looming jobs data could surprise on the high side. According to Event Risk, there are no less than 8 Fed Reserve policymakers speaking on Friday, including Fed New York President John Williams and Vice Chair Richard Clarida. The dollar has edged higher since Fed Chair Jerome Powell played down the recent inflation. That does help the dollar recoup losses from early in the week and standing at 97.84 against a basket of currencies. Against the yen, the dollar was idle at 11.48. The euro is flat at 11.72, but we've seen it dip into the 60s. Haven't eased back from 12.19 overnight, though it was still a shade firmer on the week. Eurozone manufacturing surveys released on Thursday showed further contraction in April, but at least has not gotten worse. The flow of economic data fits with most central bankers taking a cautious line of fearful of downside global growth risks, said Alan Ruskin. The dollar will be helped by having pre-existing yield advantage with a central bank that is trying to hard to steady a policy message or send a steady policy message. Interest rate futures imply 49% of a Fed rate cut by December. Pricing on changes may change depending on what the U.S. April jobs report reveals. Forecasts offer payrolls to rise 185,000 with employment at 3.8. Analysts at NAB reckon that there's a chance of an even stronger number given the run of leading indicators and the fact that March has held back by poor weather that was cleared in April. They are tipping at a rise of 260,000, which would certainly put a spring in the dollar step. The risk for bulls would be a soft wages print. Given the Fed's focus on inflation right now, the median forecast to average enough earnings growth of 3.3% and anything less could take the shine off the dollar. Among the few movers this week has been the Australian and the New Zealand dollars, which have fell as speculators wager both countries could see interest rate cuts next week. The RBA holds a policy meeting on the May the 7th, and the Reserve Bank of New Zealand a day afterwards. Well, let's go and get started on the analysis. And let's see. So we do have HICP flash at the top of the hour, okay, for Eurozone. And obviously the big driver today is going to be the NFP. Looking for 180,000 is the Reuters poll. Par was 182. Let's see. And average hourly earnings are expected to come in at 0.3%. If they come in, last time they were at 0.1. If they come in at 0.2, that'll pick, as I said, probably take a little bit of shine off the dollar. So we shall see, but that's the main key there. We do have ISM at 10 a.m. Eastern, and that's going to be manufacturing, so that'll still provide a mover here. But this will be key at the top of the hour here. See how we stand here. Well, at the beginning of the week, it certainly looked like they're going to try and maybe push lower, with the euro. We're looking at 11:31 is key here on the daily. Let's go move into the two hour. If we get a good, let's say a surprise, a big surprise, they're looking at, I forgot who it says that they're looking for 260. I mean, I think there's a possibility we can get above 200, and that'll put the euro under some pressure and really open the door for the dollar to reassert itself. So I think the risk really does come in here at this 1130. 1143 is a 78%, so you could see this market dip down here and then try and come back up and then retest a little bit lower. So it's going to be 1130, which is going to be where it's going to be key. It's key on the daily also. Tell you what, we'll go. There we go. No, it's even down though. It's 36. Let's just go split the difference here to 1135 because we break past that, really kind of scare the market. The 1130 is really key on the daily. We'll just go with the 1130. Just stick with that. And we'll mark this also because that's key on the daily. Right there is going to be key. 1218 on the upside. Well, it's pretty clear where the support is, the key level, which is this 2980. I'll give it just a little bit lower here. I'll call 2975. On the upside is going to be 3086 right there. 3086. And moving into the Aussie dollar, as we were speaking about earlier. This is key to me, and I've had this level in there for a long time. After, ever since we, come down here and use that as a marker because they open, the close, the body touch, 69.84. But I think that there's a possibility we could drop down here as long as we're below the 70 cents. You can imagine anybody that's long, if you're long, you got to put yourself in their shoes. And they, let's say they're long from 70.40, 70.25. The thing is it's going to be key if you close down here on a Friday. And so you got to be thinking about, well, God, where are they going to open up on Monday? And then if this whole thing about the RBA cutting interest rates, if that gains traction, I mean, if you're putting yourself in their shoes, I mean, where's it going to go and open up on Sunday? I mean, are we going to drop down to 69.25? Are we going to drop down to 69 cents? That's what I'm saying. That's the thinking. I think that you have to, if you put yourself in the other person's shoes, that may be long, and why I think that it's open for them to test and come down here towards the 61%. Now, I think if they do come down here, that you'll see the market pop back up because of this crazy U.S.-China talk, is that may be coming in with some kind of announcement maybe like in 7 or 10 days or so. So if it does, it'll allow this thing to pop back up. And as I was mentioning on the chat in the Asian session, I don't think they're going to pulverize the Aussie. It wouldn't make sense if you push it down here and then they make the announcement, then it pushes right back up. I'm just saying is if you come down here, people are going to say, well, I'll just take I'm going to cover my shorts here. I don't want to stay short. So once again, I think we could drop down here. So I'm going to go with the 69.55 as support. But 70 cents, that's a big fig. I don't care you slice it or dice it. That's a big fig. So, you lose 70 cents, next thing you know, you got people talking 65 and all kinds of, things like that. And next thing you know, like I said, you start at the beginning of the week and you're pushing down towards the lower 69-cent level. And that's what I'm saying is the key thing to me is because it's a Friday. So, you look on a weekly chart, that's not going to look good at all. Matter of fact, let's just take a look at it right now. You see? When you look at this on a weekly chart, I mean, it doesn't take an Einstein to say that, but obviously we'd be taking out all the support here. So you take out that support, I mean, you don't have to run a fib or an extension or whatever saying, oh, it's going to go here. Just to keep it simple is it takes out all this support. Well, then you got to go and test lower. You see what I'm saying? You have to think, well, God, whoever's long, now they're saying, even if I'm bullish the Aussie, I'm going to wait till they touch these much lower levels. So next thing you know, you're pressing much lower. So I think that's to me, that's a driver on this. Now the upside. It's going to be 70.27. We've had that 70.27 in there before. Remember we had that level, this is a level that we had way back. And I even mentioned this in the Asian session that if it dropped down there, I thought we could come back and come back to try and jump back up to the 70.27 level. So that's going to be our resistance. with the thought process. Obviously, if the market held here and then we got some surprise weaker NFP, like I don't know, let's say it came in at 88,000, yeah, then this thing's going to jump up and challenge up in here around the 70-60 area, 70-70. But for now, like I said, if that scenario plays out and we test the lower side, then I think that would be where they would make, if they try and pop back up, is where they would be looking to go up to, which is 70.27. The support will be down here at 65.73. And we'll actually go a little bit lower if we were to see that and saw all had kinds of pressure. We'll go 65.67. And resistance pretty clear, 66.84. And just press those stops a little bit. We'll call it 66. And we'll start with 66.84. That'd be a big, tall order to get up to 66.90. Boy, we are just holding in here. We're going to go and keep that. We had 73.68, no changes there. And on the upside, we had 74.40. We'll tighten that up just a bit here and go with 74.20. And let's go move into the dollar CAD. I'm going to go with this 78%. If the dollar does assert itself, and with oil being weak, we can push higher. And certainly it has made a decent run. I'm going to go with this 35.37 for resistance. Doesn't mean it's going to turn around and stop there. I'm just saying that's where you might see the market take a little bit of a pause there. Surprise on the weak side would take us down to 34.25. But don't forget, with crude being weaker, I don't think it turn around and come all apart. Let's go to the dollar peso. This one's interesting because of the risk aversion. Yeah, it's funny because like yesterday I was like, I wouldn't want to fool with this, and I ended up getting involved with it. Because it had movement then at that point. Yeah, I'm looking like, wait a minute, this thing really looks like it wants to take off. Um, $19.20 is pretty solid up in here, but let's take a look at the daily. That'll be resistance 19.22.8. It does have the potential to keep on moving higher. May not necessarily happen today, but watch this thing going forward. If we do see some equity weakness, now like I said, we've had a pretty good dip in equities, but obviously with that, if it is going to come to fruition, that U.S.-China thing, that will provide a little bit of a supporting factor. We may be capped for another 25 handles or 30 handles on the upside, and I'm talking about the equities. But then if we then start to get beyond that, then this market has a chance to really start moving higher. So be careful getting in the way of it. But that's for looking out. Support is going to be this 1905 area, 1905. All right, now some resistance at this 1170. Let's go and take a look at it on the 2-hour. Really, it's resistance here from 1175 to 1183. We'll split the difference and call it 1180. 1180. If we get a surprise number, they could push up to 1180, but support will be right here at 1119. We had that before, once before, so let's go back to that. And on to the cash doll index. Right there, 98.15. Let's take a look at the 2 hour. We'll just go with the 98.15 for right now. And that'll be key on a daily too. Daily close, that is. So that's why I put the asterisks. Support will be 97.46. Now, it'd take a lot to knock these bulls out. So you'd have to completely flip things around. In order to really scare the bulls, you'd have to go, you'd have to get this market to close below 97.20. And then that would make the bulls think, uh-oh, maybe there's more to this than meets the eye. But until then, they're still in good shape, in very good shape. $97.45. We'll go with support here, 1260. In case this dollar does end up pushing beyond that. We know that 1267 is that huge pivot. With resistance, 1280. If for some reason the dollar were to get a surprise, that would be the initial resistance. And let's move into the cross rates. Obviously, we took an inordinate amount of time because with the majors, because of the NFP. Well, I'm not looking for any changes here with Euro Pound as far as support resistance. We had 85.60. For now, I'm just going to keep it there. And the only thing we'll move down here is 86.06 will be the resistance. Keep it pretty tight for right now. Call 86.07. Euro yen trading fairly quiet also. With Japan on holiday, we're trading very, very quiet here. Have continued to dip back with the yen. Not that far off here. Hold on. A lot of good volume coming in there. Well, if it does gravitate lower, we'll go with this 24.20. It looks a little bit, if they're going to press, they're going to try and press this beyond. Let's go with 24.20 to move that down there. With resistances, which was support, is now going to be resistance 24.80. We've mentioned this several times, is 59.79 here. That's going to stay there. You can see that big major level. They've had multiple stabs at it. They haven't been able to get beyond it. Support is going to stay for right now, 59.18. I had 20. Keep that there. Euro Kiwi. This market's trading tight as a drum. A lot of good volume in here. Let's just move this up right here at 68.16. 68, we'll call it 68.15. And move into the Aussie yen. If we hit those stops, I'm going to go with this 77.63. With equities holding up okay, it's keeping the Aussie from falling all apart. Resistance 78.40. Called 78.41. We're moving back into this level again, which is the 45.03. Boy, this thing is trading very tight. Resisting gonna be right there at 45.50. 45.50. We are beginning to slide a little bit here on the sterling versus the odd here. That 86.12 is huge, is absolutely huge, a big level. And what's with my concern is we started to move beyond that. As I mentioned yesterday, and I was looking at them like, well, this is good right here. I'm looking at this, I wouldn't even call it, not even sure you call it a medium-legged doji, but I was saying, okay, now this opens the door for this thing to rotate lower. But then when we close and hung up there, I'm thinking, even if you look at it on a daily, look like you had a little bit of a, almost the wick isn't long, a little bit of a hanging man. This will be key going forward if we were to stay down here right now, but the day's not over. So, but if we stay here, that's why it's so significant, this 86.12 right here. The concern is going to be if, for right now, equities are okay, if the Aussie gets whacked. Because we're below, I'm talking about the Aussie versus dollar, below 70 cents, we'll see that pressure. But equities are kind of holding their own. I think we were not going to know till the end of the day. But if we do, this thing would jump up and take off, and be careful there. Resistance right now is going to be 86.43. 86.43. You see, we had that 12. That was huge. Support will be these lows. And if you looked at it the way I was looking at this, I was fortunate after the Bank of England, but what I did was I looked at this on a 30-minute, and the support came in at 51. And look, the support was like right there at 53. I mean, that's what I was showing on a 30-minute. It would come in there. So I didn't make a whole lot, but I was able to get out. But I saw this in Asia, but I was thinking, I'm gonna let this thing play itself out. My concern was with the Aussie versus the dollar. But I had the opportunity up in here, but I'm going to play it cautious. I'm always cautious on a Friday, especially on NFP. I like to come in where I'm open to not being stuck or trying to defend a position. My concern was if the Aussie kind of starts to run away from itself. Plus, if we do correct, there'll still be a lot of time to jump in on this thing. Support though, we'll just go with 86.53. I mean, 85.53. For now. And lastly, CAD yen. And you can see it right there. 82.62, no changes. 83.21. Well, things are so quiet with right now. We're going to go with 83. No, that's a little bit too close. 83.10. It's not that far away, but look how quiet the market's trading. Yeah, let's go with 83.10. And there's the bias chart. I'll get that posted. And thanks for joining us here on the European crossover, and good luck with NFP Day.